Do we have a Melissa Bradley in the house? Ah, fantastic. Melissa and I kind of actually go way back, and I can't even remember, where did we meet? Do you remember? Sundance, holy schmoly. Yeah, Sundance, Media That Mattered, that must have been like 1999
That's
or
right.
something. So it's kind of like pushing, we're like 16 years we've known each other. We've never worked really closely, but we have run in the same kind of like social capital activist circles and trying to change the world one investor at a time and one in portfolio at a time, and in various ways, although differently. And Melissa's teaching at Georgetown now, and running Sidecar Social Finance, which is doing some really great work, but has been at the helm of various really cool stuff in the impact investing world for all those years, and maybe some years before that. I think we're sort of in the same tenure, like coming up on 20-year thing. Yeah, so that's cool too.
We're just old to these people,
we're
let's be
old.
clear. It's all relative.
So that's Melissa Bradley, and let's invite her up. I'm going to join her, and we're going to kind of play it loose and easy and see how this goes.
I'm from the East Coast. Everything is loose.
Right. Nothing is. Yeah. And I'm not even sure if we're going to call me a moderator or. Oh, thanks. I'm so parched. This is such good water. Notice the.
I know. I wanted to empty it and put some Red Bull in it, but I figured I would wait till it was over. I love the Red Bull.
Yeah.
I'm not as healthy as you all are.
But we're going to have at least 15 or 20 minutes at the end for Q&A. Although, I mean, I'm always open if somebody's like just burning, cannot, either because we peeved them off or because they've got something that can't wait. We're open to having somebody interrupt us along the way, but we're going to go for about 45 minutes and try to kind of glance across a bunch of different of the buckets that I think have been talked about today, and in a way maybe add some sort of a macro cross-cut over it that, that with a little bit of eye towards inclusivity, social justice, some of the things I was just saying a little bit there, but also just our experience in the field and practice. So.
How many are students?
Yeah.
Ooh, they must all went to happy hour. Okay. So then who are the rest of you? Who are you? Are you a student?
I work at Singular University.
Oh, very nice. Okay. Are you students? Okay. All right. Just checking. Okay. I'd like to know who's in the group.
Yeah, no, that's good. That's good. I thought we would start with like the human capital bucket, if you will, talking about the probably as I was mentioning, what I feel is the most important ingredient or asset class in our. If you think of your toolkit, we've got like time and talent and network and grants and equity and debt, like all these different things that you can bring to bear. I mean, having the human capital bucket like really nailed is the one that matters the most. When you think about inclusion and diversity, and I know this was talked about earlier to some extent, how do you approach like building companies and systems around those issues as it relates to people power?
So it's interesting when you were talking, I mean, I think that it's relative, right? So obviously I'm a person of color, I'm a woman, I'm gay, and all those things play, right? Because I think if we assume that human capital is asset class by the majority, my asset class just became less than your asset class. And so I think for me, it is being mindful that if you think about the demographic shifts, and I'm based in DC, that are happening in the world, my whole focus is how do we position human capital that is going to be reflective of the largest consumer base, the largest investor base, and the largest employer base. And I think that I'm 49 years old, so my rhetoric has changed. I married my wife, and I was the black militant at Georgetown, power to the people, and lived in the Black House. And I led with race. I think as I get older, then I led with gender. And now I lead with class and the new majority, right? And so I think that for me, I am beginning to stop focusing on diversity and inclusion and frame this as, do you want to invest in the minority or do you want to invest in the new majority? And position you being part of the new majority as a valued asset in being able to not just cater to the US, but I think the recognition finally that white people have always been the minority, right? I mean, I think again, I'm biased because I'm in DC, but I think the Trump leadership is in response to an ignorance that we've always been in the minority. And so I think I use it as a tool to say, not only are we about to be the majority in the United States, we're the majority in the world. And while we are not all the same, we are not a homogenous population, there is an element of understanding how do you aggregate those perspectives, how do you aggregate those views, how do you aggregate and use cultural competency as a competitive advantage.
Yeah, it's interesting. I mean, we've been wrestling. You put on these conferences, we hiring people into these companies, either portfolio companies or actually our companies, whether it's the one I'm running or one I'm just a board member on or something. And it's like, it is so, you got such committed, I think, self-aware people putting these things together, and it is so hard to actually hold people's feet to the fire to build inclusively. Even though they all want, I mean, everybody wants it. And I remember, at SoCap, we had this thing where like, we will not, and there's like 150 panels, 250 panels, I don't know, there's like 300 speakers is all I know. This conference that we put on, and we finally decided to say, there will not be a single panel of those 200 panels that does not have woman or person of color on it, period. Because otherwise, you just wake up and it's just not on the table enough. And so you have to like actually like protocol it in some ways, even though it's kind of little anti-entrepreneurial, go with the flow opportunity, like all this thing, you got these great people, it's all going to work out. So I'm just really aware of the wrestling match myself.
Well, I also think it's interesting, right, because we've known each other for a while, but when you think about ESG, right, what's interesting is that the E for environmental is overweighted. Right, governance only comes up if there's a crisis, and social, we talk about all the other indicators except for women and people of color. Right, we oftentimes don't look at composition. Right, when I think about, I just was reading two people's investment policy, and they were like, well, I won't say the firm, but let's tilt ESG. I was like, if we tilt it anymore, we won't be in it. Right, there'll be no S, there'll be no G, and E will be like 20%. But I think that it is unfortunate that we are still having to protocol it, but I think that having been to SoCap in the beginning, and more recently, I think that there are those kind of panels, those kind of leaders in the sector who are saying this should not just be something because it's the right thing to do, right? But there's also an element of fiduciary duty and more responsibility.
Yeah, and I like that for bringing it up to that dichotomy, or maybe it's not a dichotomy, that's the point. And I think it is, I'll leave it at that. But what about, do you see a promise and or a challenge with this whole kind of generational shift that's everybody's talking about? Like, there's this Gen Y, millennials, 16 to 30, whatever, 35-year-olds are so much of a certain, there's a lot in this room I can see.
I felt the pressure already.
The pressure, it's like, don't
throw your water bottles at me, I might get hurt.
Young and hip anymore, Melissa. Oh, shit.
I am, I'm hip, I'm just not young.
Hip. You're super
I'm
hip.
just not hip.
You're hip.
I'm not young.
I'm not hip. So like what is one of the things that I liked, I read this, I can't remember, and I know this is a real stat because it's down to the nearest percentage point. 92% is the percent. 9 out of 10 plus of millennials surveyed in a big national thing that some wealth management firm do, actually said like, yeah, you gotta integrate purpose into business. And 9 out of 10 actually had that language accessible, not to mention had that percentage saying, yeah, very much so, I think that's the way things should be. I mean, I look at Gen X, we're sort of Gen Xers, and it's like people are like, huh? Obviously we know who we know, but just as a generation, when I think back to college and that age, when I was in that age frame of sort of 18, 20, 25, people were not, and are still not, really that, so I think that, I think there really is a true demographic hope that we can have, the demographic hope.
Well, it's not surprising, right? So at Georgetown, I only teach, not because by choice, but I think who can tolerate me, I only teach graduate students. So I teach master's students, either MBA or School of Foreign Service. And I teach 4 classes, so I have 200 students. And I put them in 3 buckets. They're the ones who are the die-hard do-gooders, and I'm the only social impact classes they take. It's those who parachute out of Goldman Sachs and they just want to prove me wrong and have dialogue and discourse at 5:30 at night, and I'm like, come on
like that
with
in
it.
This room?
Right, like I think this is baloney, but my boss told me there's this thing called impact investing. And then I think there's those who are trying to make a transition, right? But I don't think it's surprising, right? Because after 2000, and I have 6 kids. And so I have two sets of twins. So the 9-year-olds, Lord knows what's going to happen with them. Then I have 2 in college, which fits this generation Y. Then I have 2, thank God, that are done. So I have 6 kids and 4 tuitions. And that's how I keep track. And I would say that I see a difference, right? The ones that have graduated, survived, and were pre-2008. I think the ones that are in college, they know no different, right? Basically, they say, anybody under 18 in here? So basically, y'all effed up. I'll be respectful. I won't embarrass. And so we're not going to do anything that you do. And I think that there is a greater recognition of the market failures, which I think I can say I had a part of as someone who initially went to school and wanted to go work on Wall Street and then realized nobody else looked like me on Wall Street. But I also think that there's a shift around the social compact that you were talking about, right? We have our daughter went to a new school, and she said, I went to school today, and I told them that I was black, because if you look at her, you can't tell. And I told her that I have 2 moms. But can I go back to school tomorrow and tell her that we're Jewish too? And I was like, yeah, sure, whatever. That's a lot in the first day. But I think that there's an openness, right, of where maybe we grew up or I grew up with this is what you're supposed to do. You're supposed to have one job and you're supposed to stay in it. I think there's a level of macroeconomic pressure that says the world is not revolve around money, as you alluded to, and I think there's a social awareness that difference is not a bad thing, and that the more you can adapt, the better off you're going to be. And I think the prior session we were talking about social capital. I think social capital is not just who you know, but how much diversity do you have in terms of being able to enrich your own personal experience. So I'm quite optimistic. I mean, I love teaching because it's like, wow, I can actually maybe retire one day and we'll be okay. But you've got kids, so you see it.
Yeah, they're little and they are completely yeah, I don't know. I don't know what they're gonna do. I was like 7 and 10-year-old boys, so they're just like whatever. But yeah, it's true. I do. I remember reading this. I'm not actually as a factoid person the way it's coming off because I realize I'm just spitting them out. But like that, consumers are willing to pay 10 to 15% less. More for some perceived goodness or sustainability or something, and I think they were talking more about consumer goods. And can you reverse that and say people are willing to work for purpose and get sort of like 85%?
Yeah.
Like, do we have to take haircuts? I mean, I remember it's so easy to say, you look at all these early stage social enterprises, and I don't even like saying social enterprises. I mean, I don't like saying impact in social investing either,
Right.
because I long for the time when we can stop
just
that,
is.
and it just is, right?
Right.
But this is like an old tune. But the idea that we have to, work for less money and to do what is good or to integrate good. I think a lot of times it's like we're talking about early stage startups. They can't pay anybody. I mean, that's the reason why you're not making any money. It's not
Right.
because it's a do-gooder thing. It's like nobody's making any money in a startup. But in general, like, what's your take on the whole kind of like?
It's interesting. I think most of the students, because I teach electives, they want to work in social good fields. I think the challenge is, one, there's not a lot of jobs, right? Let's be clear, right? There's maybe 10 impact investing jobs in traditional firms and maybe 20 in other places. So I think on the supply side of capital, it's tight and it's constrained. And I think if you work at a traditional impact investing firm, it tends to unfortunately mirror more nonprofit type stuff. And if you get into a large bank, it's probably not the values you want to live. I think the social entrepreneurs are going to entrepreneurship. I think people are aware of that. I think the challenge I'm seeing, and I don't know if it exists out here, is it's not so much people are willing to take the haircut, they can't afford to take the haircut. I mean, I don't know about you, but when I graduated from Georgetown undergrad, I had student loans out the wazoo. I'm waiting to write my last check still. And so I think it's really, for the students that I see, it's less about the desire and willingness to take a cut. It's that there's nothing else to balance out the opportunity cost that I've had to sacrifice for my college tuition. And so if there were programs like I guess used to exist where if you go into the community you can get some of that taken off. I think coming out of Georgetown and making 80 to 100, nobody's going to be upset except maybe somebody's parents because you spent 100 to get that degree. But I think it's all the costs that have been deferred to allow them to actualize their values that creates this tension of either I'll go do it now and suck it up and hope we're really successful, or I'm just going to go get the traditional investment job, and then I can do good on the side. And that's actually frustrating because I think that's where this generation who really wants to do good, they honestly can't afford it. I mean, unfortunately, there is a cost of doing good because of lack of capital flow, because of structural challenges, because the capital markets just aren't generally, I mean, I come from Rise of the Rest compared to here, right? So there's no real venture capital on the East Coast unless you go to Boston. So I think anybody beyond Silicon Valley is already capital starved. And so then to say, if that's what I really want to do, I see people, we just did a tech pitch competition, and I don't know if it was, I don't say this to be sexist, but every single male drove an Uber on the side so they could actually run their socially responsible companies. And I said, more power to you. Because they didn't have that privilege to say, I've got friends and family, I've got a trust fund. They're like, my student loans have come due, and they don't really care that I'm unemployed. There's no forbearance because I'm not working. So that's what I see is the challenge, is that it's less about what I'm making, but it's how do I manage the cost I have to get to this position to even have that choice.
And I will say that over just the last 2.5 years or so, we've seen a pattern of people getting picked off from firms in the impact space, especially in my world is impact investing in particular, and to go work at other ones for a lot more money, and that it's heating up. Like there's definitely, as the family offices are coming in, and the media networks of the world, and now the big banks and the Bain Capital, et cetera, et cetera, et cetera. There's suddenly like a lot of competition for talent
Although they're not happy, right?
No.
I mean, I think we know the person who went to Bain.
Which person?
It was a young lady that went to Bain. She
Oh,
used
I
to
know
be in
that person,
DC. And she would say, I go
She
back.
would say she's.
I think she's
there's a camera
experienced.
on.
Yeah, that's okay. I think she say, or he say, that she's experiencing some frustrations, right? I mean, I think that that's where there's this balance of trade-offs in terms of, yes, I'm making more money, but am I having the same amount of impact? Because it's a lot harder to move $100 million than it is to move $100,000.
Right. And there's a reason that there's more money floating around that system. Either there's a incredibly eccentric, really rich family there that may be pulling rugs out from underneath their staff people, or there's a corporate entity that has all sorts of reasons or not reasons for their authentic or inauthentic commitment to the thing that you just, So that's tricky. What about universities? I mean, you're in one.
They're awesome,
we're
aren't
sort of in
they?
the context, and universities are great.
And this is a Jesuit institution, is it not?
It is.
That's what I'm talking about. I was so excited. I told my dean, I said, I'm going to USF. I'm going to visit a fellow Jesuit institution. So
what's the
So
what's
first of all, we're the
opportunity?
best ever. Let's just be clear.
Yeah.
But so I'd say that I was really proud to come here. We at Georgetown are going through this review because we don't believe we have embedded our Jesuit values well enough in the business school. But I consider it a real privilege, right? Because we are all about cura personalis, care of the person at the heart. And I think that is our competitive advantage. So I think universities have a role. I think Jesuit universities have a very particular role because of our values. Now, I can't, this is a fabulous building of USF. Georgetown can't raise money to save their life, so we've got to work that part out. The Jesuits, they keep praying for it. It ain't coming. But I think that this is a natural place where people come and are defined by values. And so I think that there are universities like USF and others who are either bound by historical values are bound by commitment to the communities that I think are great accelerators, right? I mean, it is a privilege to be in an institution, but to then have an institution where you actually practice and almost perfect your craft, I think that's what universities should be. I tell my kids all the time, the youngest ones, I'm paying for you to go to private school now. After that, I assume you're going to go to school online because I'm not paying for a degree that's going to be worth nothing. So I think universities are great incubators, accelerators in and of themselves. I think they're great testing grounds. I think it's the perfect place to fail 20 times. And I think if you find yourself in a place where you're supported, right, and the values are baked in without having to make up some new organizational structure, you're well on your way. So I just want to give a shout out to the Jesuit institutions, that's for sure, yeah.
Yeah, and we're better, right?
Always. What's Harvard? What they got? What's their values? I don't know. I mean, they have the number one endowment. That's it. There you go.
And a forest. No, that's Yale. I used to live in New Haven and get confused. No, I think that's right, and I don't think it's. I mean, I think all universities have. if they get serious, but it's like all this stuff that we're talking about. It's like you're either in,
Right.
or you're kind of like, what are you doing
Right.
with the deck chair reorganization thing?
That's right.
And I would challenge this university, Georgetown, and any of the rest of them to really examine the will, the mandate, like where it's coming from and what it means to go all in and then you figure it out. It's like, well, let's bring in practicums and really connect the students to experiential learning and get, to have a seed fund where we actually get some alumni, and you can do all that. That's the kind of how and what. But what I find, and I was having this really frustrating call today that brought this up, but when you're trying to partner in this space, there's like two kinds of partners. There's the ones who are like all in, and you can butt heads, like you can have issues around the value chain and and basis points and yada yada. But if you're real fellow travelers and you are trying to pursue the world that you want to leave to your kids together, and you find a way, or you don't, and you shake hands and you walk around or hug. We would hug in this sector, and yet trying to over and over like interact meaningfully when they're not of that ilk, that positive ilk. It's like those are the two kinds of experiences you have, and guess which one is the more fulfilling? It's the first kind. And you work with these wealth management platforms who are like saying all the right stuff, right? They've got the impact czar, and they've got the something thing, and they've got the right and they're coming out with all this product, and it's not doing anything. And I think I was getting a little off track, but the university is the same thing. I think we're going to have two kinds of university commitments. It's like, let's have an ethics class and a little bit of this CSR something and a club. And that's great, better than nothing. I'll take that over what we had 10, 15 years ago. Especially undergrad, there was zilch going on, and now it's starting to happen, which is awesome. But the difference between that and saying this is a pillar of what it means to get a business degree. This is a pillar of what it means to be educated and to pay all this money for this education, right? Like this is part of it. I think that I think the how is less of a concern. But.
I will say, I'm proud of Georgetown because I think we have piecemealed it, right? So we were one of the first to divest from fossil fuels. To me, we were a little late, but we finally did it.
Yeah.
But now the university is signed on to be an anchor institution. And so they recognize that it's not just about saving the environment, because I must say, nothing personal, I'm over people over polar bears any day, but that's just selfish. But they've decided that it's not this either or, right? So they have looked at their endowment and have taken out and done all their screening and cleansing, but they have also now started to look at their supply chain and looking at who are they sourcing it to, where are the women, where are the people of color, where are the social enterprises, even so that they're about to put out an RFP that looks at who is managing their money. Right. And to me, that's like the epitome, right? It's one thing when you are in the business of service, but it's another thing when you actually integrate impact into your stewardship, particularly around your finances. And so we're beginning to see a lot more schools do that. And to me, that's all in.
Yeah, and what do you think it means to be all in as an investor, just to kind of jump into the investment thing and maybe...
This is where you and I go back, right? We think about Sundance. I think all in is relative. I think that for me, all in means...
Hanging out with Robert Redford at Sundance.
Well, yeah. And he was cute, but... Anyway,
Pierce Brosnan was there too.
That's you're on the wrong side. That's not my team, but I'm sure they are cute. Halle Berry. No, I'm just kidding. So
she wasn't there.
I know. So I would say, here's what I would say. I would say that one of the challenges that I have is being able to distinguish my personal belief of what's all in and facilitating that of my clients. And I think every asset manager has that. For me, all in is 100% of your portfolio is working across impact, and it's impact in its full definition. It's not, well, I'm going to do the environmental thing because trees don't exist without people and vice versa. So I get nervous when we start pie charting things too much. But I think for me, all in is that you have made a commitment of 100% of your resources to impact, however you define it. You have recognized that there has to be some level of concessionary capital. And I do make a distinction between grants, but I think the capital markets are plagued by systemic racism and structural barriers, that there is no way that we can believe there is equity and equality around everyone achieving market rate plus.
Right, I always think of it as there's two kinds of opportunity. There's the opportunity chasing opportunity, which
right.
is we can make just as much or more
Right.
while doing good.
That's right.
And I actually believe that is true for some things.
Sure,
And
sure.
then there's the gap.
That's right.
The gap filling, and then you find the opportunity optimization within it, and that's where the pain and suffering, bullets for the team, concessionary, something
right.
something is, and it can be because it takes ridiculously long
right.
to accomplish what should have seemingly only taken this, or you make less money, or it can
Right.
be any combination of those
Yep.
things.
And I think that's where, I mean, Lisa Hall, obviously at Anthos, has been a leader in the research around this, and I think this is where it's what you define impact. I will say that as a person of color who grew up poor, as a finance person, I have always seen the inequity in the capital markets, and so for me, impact is actually changing the equity markets. It is not adjusting them so that we can only invest in good things, and I don't think they're mutually exclusive, but I think it is the lens of which you approach what is impact, right? I mean, we can think of lots of people we know together through Investor Circle, and during my times there, it was clear all in meant something very different to an Investor Circle person than it did to, the Northern Trust group, which was comprised of women and people of color who were investors. So I just think as long as there's an awareness that if you're going to have that impact, it can't just be on your personal portfolio, but it's got to be at a systemic level. Otherwise, as Laura Andrea says, we're just churning money to try to band-aid problems instead of fixing the system.
Yeah, I think when I think about integrating value and values across all this stuff in the world and the wrestling match for the soul of our system and all that stuff that we're doing, I do think that, the capital market system works really well in ones and zeros. It's very binary. That's how we move everything around really fast and anonymously.
Yep.
There's no, the nuance and relationship capital are the antithesis of a major capital market system's ability to scale and operate at light speed. And we see what that gets us, 2008, right? Black box algorithmic driven
right.
meltdowns and stupidity, and people selling stuff people who make stuff they don't even understand, much less the people selling it. But
And then they go on to be great thought leaders, though.
But impact, this sort of new social entrepreneurship and impact investing, somehow I feel like we have in the last few years stumbled into an engagement routine pretty broadly. It's still at its early days, but pretty broadly it's hitting academic and student bodies. It's hitting investors across a whole wide spectrum, both institutional and individual. It's hitting a whole new generation of entrepreneurs trying to integrate stuff into it, where nuance is being kind of wrestled with and brought into it, and that's where it's like, it's not just make all your money and then some and then give it away to
Right.
philanthropy later.
Right.
There's actually this full spectrum between philanthropy at the most extreme, where you do get money back with philanthropy, by the way, right? You get your marginal tax break. Like if I'm in the 40%
Well,
tax
for now,
bracket,
yes.
until Donald Donald
For
takes
now.
it away. Damn, darn it! Shoot. Well, we'll give it away all now, right? That's what you should do. But then this whole spectrum through ways to just be incredibly catalytic, or to go where no of this money will go. Like that, sometimes it's you can be risk taking to bring in lots of market rate money on top, right? Other times it's that you just literally are going someplace where only crazy, passionate, impact-oriented
Sure.
people would go. So.
Sure.
Have you seen any really interesting integration of philanthropy into investment that? If something pops to mind.
Well, I feel obligated because I'm here in San Francisco, but I think there are people doing some interesting things. So I don't know if people. So forgive me, because if you're in DC, you don't go to Virginia, Maryland. Do y'all go to Oakland?
Love Oakland.
Yes, no, maybe. I go, but I don't know if that's like a O-Town kind of thing. But when you think about what the Kapoors are trying to do, right, of figuring out maybe less as part of the core investment thesis, but how do I leverage philanthropic dollars to build an ecosystem of historically marginalized entrepreneurs, i.e. those who've been formerly incarcerated who would never get invited anywhere, but then not then give them philanthropic capital as a subsidy, but use that to build their capacity so they can enter the markets. And we have very good debates of whether that's good or not, but I think what I like about that is that they're using subsidy to build capacity as opposed to subsidy to subsidize somebody else's money, whereby then you've not changed the perception that that person or that investment is less than. And so I think that's where I struggle with how do we use philanthropy. It should not be used as a kind of a proxy for, well, they're probably not as good, but you got your back, as opposed to how do I get them to the mainstream capital markets. I think that's a good one. I don't say this because he just walked in, but I think ICA is doing some really good stuff as well in terms of looking at the ecosystem, not just from building businesses, but how do we create good jobs, right? I mean, I think it's ironic that we're on this rant to get jobs to come back to America, which I think is wonderful, but are they going to be good jobs? Are they going to be living wage jobs? But I think that's where philanthropy has played a role from both a policy perspective, a training perspective, but the idea of getting people to capacity. Otherwise, I worry we're creating a marginalized system, right? For those who look a certain way or do a certain thing, that's your door, and then for everybody else, that's your door.
It reminds me of actually in Hub Oakland, which I think that's probably where we met, was because we were both looking at that and got involved in that deal as investors for Impact Hub Oakland. There's an initiative right now with self-help credit unions and Impact Hub and the Impact Hub network, but starting off in Oakland is the first thing, where they got some philanthropically minded folks. They're actually not even giving grants, they're just guaranteeing a piece of a loan from self-help to, to promote inclusive access to capital for minority entrepreneurs in Oakland that are part of an accelerator program. So they're getting like 10 grand. They haven't, and they're just wiring this up, but it's like, I thought, that's really cool. It's like, yeah, okay, that is a philanthropic thing. You're not getting paid for taking on risk. You may or may not have to make the grant for the units of $10,000 loan that you are backing, but you're bringing the capital in, and like, that's smart philanthropy, but that is philanthropy.
But you're mitigating risk, right? You're paying down risk, which is what we have new market tax credits for and other things, but you're not paying to change one's perception or paying because you don't think they belong there, right? It's a market efficiency that you are utilizing.
That's right. So I think that I mean, those are the ones that I tend to get a little bit more excited about.
I agree.
But that's because I'm a geek of capital market land. So, whatever.
You proved that today.
Yes, exactly. What about, I'm running across a lot of like localizing going on in regional. Have you seen any really interesting models, or how do you think place and localize fits into the investing conversation?
So we were also having this conversation. So I do three things. I'm a professor, I co-manage Sidecar Social Finance, and I run a local project in DC called Project 500. And we have made a commitment to the city to help 500 Black and brown businesses scale. And I think that a group of us are part of this larger JP Morgan Ascend 2020 program. But I think that because the capital markets are so inefficient, and because the cost of capital as you move beyond certain regions, I think this focus on hyper-localness where there is faith, there is trust, there is family, there is connectivity, there is supply chain that people are finally catching on to, that is really the wave, right? Because most money doesn't want to go too far from where they are. And this was an example where there's, I think there's really 7, but 6 cities that are committed to increasing the revenues of Black and brown businesses by $1 billion in 3 years. That's a huge signaling effective. JP Morgan Chase thinks 6 cities can contribute to $1 billion. I just like, oh, I got 1/6 of that, let me get moving. But I think that says a lot, right? That there is a belief from a major institution that there is that kind of wealth opportunity in local communities. And the model is set up that it has to have an academic institution as an anchor, the community leader, and then CDFIs. And so I think that is completely disruptive.
What's the example of the community leader?
So it would be Project 500.
Like, oh, you.
So we,
You're the lead.
my
Okay.
team is the project lead. We leverage the university for human capital of students in space. And then
The CDFIs have
the
the
CDFIs,
loan
not
capital.
JP Morgan, right? Because they realize,
Do they
right,
put the
that
money to the CDFI?
it's a small grant. The money has to come from the CDFIs.
So, okay.
So it's interesting because I think that's a model, and I have no allegiance. My money does not sit at JP Morgan. But I think it speaks to an institution of that size recognizing that they could easily have thought of 20 million other ways to try to create $1 billion of wealth, which could have been, let's go create another hedge fund or private equity fund. But they recognize the direct investment of local communities, probably the more typical ones like LA, San Francisco, New York, Atlanta, but could actually produce $1 billion. That, to me, whether it works or not, that's a huge signaling effect.
Yeah, and in terms of sourcing the capital, I think that people respond to what they know. It doesn't, I mean, and that's the most obvious, that it's like what's around them or what's across the street or across the tracks or whatever, their personal experience, and also peer pressure / social capital, like people. And I remember this, the philanthropy consultant once we brought in, I can't remember what project it was, but they were like, yeah, there's 2 reasons why people give. I mean, there's like 20 reasons why people give money away, but there's only 2 that matter. It touches them personally, like their experience, or somebody asks them that they know or care about the opinion of.
That's right.
Which is why churches and schools are like the perfect storm of the 2 of the number 1 and 2 reasons why, and they're like really equal.
Yep.
And altruism is like so flippin' far down the list of the reason, like
right.
because I can tell that that's a good idea. I mean, yeah, that's great. We wish that, but we actually don't behave that way as humans.
Right.
For better or for worse, for probably often better and worse.
Yep.
But I think that impact investing, from my experience over the last, especially, well, all along the way, but more recently, even more so, that the way that you can engage people, to the extent that it has that human and experience kind of, sticky,
Yep.
that's the easiest on-ramp for folks, which is why I think the localized
Because they want to see
concept.
it. But if you can see it,
And
then
also
it makes
it's
it more
touched,
real.
Like they see how like caring about the social contract in their neighborhood and its homeless people and jobs and wealth, it actually can affect them, and they're seeing it. Yeah, they're seeing
You
it.
change that next cocktail reception conversation.
Well, there's that too. Let's switch to, I just before we move off of, we've kind of been around investing a little bit and people, I mean, the quote that I have run across recently is from Abraham Lincoln, which I really like, which is, labor is prior to and independent of capital. Prior to and independent of capital. Capital is only the fruit of labor, could never have existed if labor had not first existed. Labor is the superior of capital and deserves the higher consideration. Flowery language from Abraham Lincoln. But I guess I think what I was saying before, and also as a practitioner of capital in the impact space, it's really easy, and you go to all these conferences, these wealth management people are just like let's pray to the investment gods and the capital and capitalism and all of that stuff. And I think we need to figure out how to interoperate and move it better. But the attention to great entrepreneurism and people power and inclusivity around it and the resourcing of it and is so much more important, I think, fundamentally. And so a lot of times we get off and you might as well, people don't even exist. Everybody's just talking about like geeky capital stuff.
I think there was a conference in DC, I2, and Matthew Weatherly White, people were there. And he runs CapRock, a pretty well-known fund. But there were people in the audience who were mostly institutional investors, pension funds. And so it was a pretty highbrow conference.
Sounds lovely.
But what was interesting is the best part came after lunch. I think people got some energy, and they said, this is really cute that you keep talking about these screen funds. Tell me what's in the screen funds. Woo! They were just like, it was like Casper the
they're
Ghost.
Like, ag,
right,
and they're like, what ag?
And they wanted
Monsanto.
they wanted their PowerPoints, and they said, no, but tell me about the companies that are in them, and nobody knew. And so I think that points to the fact that people are moving beyond, right? That they recognize that the frailty of organization resides with the strength of the individual, and we have to stop looking at companies as mere commodities, but really understand who is behind it. I think it's an interesting quote. I want to know if he said that before or after he freed the slaves. But I think that's what people are counting on, right? That they recognize that whatever is in my portfolio, at the end of the day, there's a human there. And I think that part of this new generation is also saying, look, we know the capital markets, they work for some, but I really need to understand who is in charge. And more importantly, as we see with the lack of kind of secondary markets and IPOs, although we have these new things
and
coming.
who gets access to VC money,
But how do those values change? I mean, let's be clear, Ben & Jerry's is an anomaly, right? That after the acquisition, they've been able to preserve and be a company within a company. We'll see what the new education company does as a benefit corp. But I think that's where people are realizing, even with all these structures, at the end of the day, who is responsible for the fiduciary duty of this company? And I want to know that those values are not going to change if my valuation is $1 million or $1 billion, and that's where I think the skepticism comes in.
Right, and if the institutional money is short-termist and blind to the true integration of value and and thinking about people and planet costs and considering them in the total package of value rather than just like trying to externalize them onto the health system and the tax, and the EPA and stuff like that.
Rick Perry, oh yeah.
Yeah, who? And it's like if we're gonna still be trapped in that system, we can move the deck chairs around all we want.
That's right.
But if you've got the system that just doesn't care, I loved hearing about this thing from the Labour Party in England the other day. it was just an anecdote, so I can't swear by this because I haven't looked it up, but it was somebody from England telling me this, so that doesn't mean anything.
Sounds good.
But it
Sounds
sounded good because they had that English accent that's so cute.
Okay, you got to do the accent now.
I can't do it. No, I can't do it. I'm not going to do it. You're not going to get me to do it. And they're like, the Labour Party has gone on record saying, which is out of power right now, that if they win the whatever, their majority, they're going to make it a requirement that any company that wants to either list publicly or sell itself majority plus has to do one thing first, which is offer itself for full sale to its employees. This is true, right?
Yep.
I didn't make this.
Yep.
The English person didn't make this up.
No.
And that would be like, well, fine, but how are those poor employees going to get the money in time to stave off? So it's all hollow, blah, blah, blah. Well, and then they're like, oh yeah, and the second thing we're going to do is we're going to take the national bank structure, probably, I assume it would be the big society bank.
Yep.
That they already have set up, and we will guarantee the financing of said employees to buy that company. I mean, this is like they're going to cut into power sooner or later. I mean, it's like saying, oh, the Republicans will never get into power. Well, there you go. There you go. So this is going to happen probably in England in the next 5, 6, 8 year, whatever the cycle is.
Let's hope so.
And wouldn't that be? I mean, that's tectonic. That's what I mean by like stop with the deck chairs, and because that's about the power of share of what's really wagging. Anyway, I thought that was such a good.
Well, it's
one.
also a response to that Theresa May talked a lot about purpose-driven business, but it hasn't exactly happened because she's managing Brexit. So I think I think even if they don't win, they're going to keep going towards that direction of really moving business to actually work for people.
And I mean, that kind of stuff gets me really excited because I just feel like that will change the rules of the game at fundamental levels. Like this CSR thing, and I'm sorry I missed the luncheon chat on CSR or earlier in the day because I don't know exactly what they covered, but do you see the idea of corporate social responsibility, is that morphing? Is it going in a different and a better, or what's your take? I mean, I think greenwashing is kind of like last year's business.
I mean, I think they exist, which I'm always understanding how do they exist. I think they've moved from the assumption they're profit centers to cost centers. I will say I always use students as a proxy. Nobody's rushing out to get a CSR job anymore, so I assume they don't exist or they're going away. But I also think that they're becoming marginalized. The reality is that used to be one way of which you define or signal your commitment to community. Now we have new corporations, new structures, new ways to leverage the market. So I would say I used to know, honestly, like 20 people, and I will say there used to be a whole course at Georgetown on CSR. It is gone because I think there's not 20 people to come and even talk about it anymore.
Right.
And I think that people realize it's not working, right? I mean, I think when you think about one of the many indicators, not only have this historical policy levers that have pushed us this way, but you've got consumer demand. And I think that particularly amongst this group where, if I watch my teenagers go shop for something, they've compared on 20 different sites and looked up the origin, the supply chain, they know who touched it, whose mama made some money, who got pillaged by it. And so there's a higher level of transparency that I think has put some pressure to say what really is CSR, right? Other than your public statement of what you do, we actually can then check your supply chain. I think we've seen tons of companies where they say they're doing good and they're not. And I want to be clear, I don't think anybody is 100% perfect, but I think the use of technology and transparency, I'm not really sure what the need is of a CSR company anymore because people are going to find it themselves, right? We don't need the beautiful, colorful 100-page document saying how wonderful you are because the truth comes out, right? And it comes out either on Medium that you've sexually harassed me at a tech company, or it comes out because somebody's died from the product or something bad has happened. So I think people have their own report cards now.
Yeah, I've noticed that the conversation maybe 5, 10 years ago with corporations and their interest in even having anything that was public about it was much more about we're worried about those activist investors, the media, maybe a little bit of our consumers. The center of gravity seems to have shifted to we're worried about what our millennial employees think about us. I was talking with a big 5 consulting firm about starting this impact investing thing, and first I thought it was because they were really into it, and just it turned out all they cared about. The reason why they wanted to do this thing was because they wanted a way to engage 6,000 of their 25 to 35-year-old employees that were jumping ship to go to the other big 5 accounting firms every 18 months, whether they needed to or not. So that's, I think, but that doesn't change the fact I agree that it's. I think that the shift is from CSR to pulling apart your supply chain and really looking at the products and services and binding it in,
Yep.
which is probably a good thing.
Oh, yeah.
Like that's good. So there's some
yeah.
progress
Yeah.
there
Oh,
versus
yeah.
like 10, 15 years ago.
And I think the fact that, you know, as opposed to waiting the report and watching the stock price the subsequent quarter, there is immediate reaction, right? Delete Uber. It don't get better than that, right? I mean, that's just immediate
Did anybody
reaction.
delete Uber off their phone? This is good.
If you didn't delete it, but
If
at
you
least you
didn't
haven't
have it,
used
then
it
you
recently.
didn't delete it. So I'd say that.
2 years ago.
Oh,
Oh, you're way progressive. Way progressive.
That's why I thought what I really liked if I met into it, but I think, you know, we were talking about how it's changing from the top. I really feel it's going to come from the bottom because when you see like consumer moving away the bank account, and that's what I'm going to do next, moving my bank account to the bank that's going to feel is more responsible. And I think this trend is really going to accelerate in the next couple of years.
Yeah.
So I have a lot of hope that's going to change that.
Sure.
there and I'll tell you, the wealth management apparatus,
Oh, yeah.
the J.P. Morgan Chase, Morgan Stanley,
Yep.
blah blah blah, of the world they are freaked out about this,
Yep.
which is why they're stumbling around trying to figure it out because they know that once women and millennials, and not to mention women who are millennials, get their hands on the keys to the wealth,
It's over.
they're not going to stay unless there's
right.
like a purpose-driven kind of. Go ahead.
I just wanted to add, I actually pulled out money from BOA and then got 10 other people in my circle to quit as well. Go to quitting.
I like that.
So,
I like that.
Did you go to self-help training? No, that's a good one.
Yeah, to me, who needs CSR, right? I mean, I think, you know, I hate to say, but to pay someone $1 million to watch a bunch of graphs when all I have to do is have one other millennial reading Twitter, I think that's a better use of money.
Yeah, exactly. I'm really interested, and I mentioned it earlier, I think before we started when I was up there, but I think that, and that was a perfect example. Like, there's nothing that moves things fast more than the consumption choices that we make as either corporations or societies, government, and we starts right with the choices that we have about like moving our checking account and and
Yep.
who's our wealth advisor and are we buying fair trade organic or are we just not? So I do think that that attention to consumption is part of this sort of landscape, not just as entrepreneurs or investors trying to dovetail into it, but actually as activists is a really useful tool because, I mean, investors follow good ideas and made up by people who make up those good ideas in response to market appetites and the ability to sell those ideas. I mean, that's how it works. It's not the other way around. Do you have any thoughts about like the role of consumption or moving thoughts, how people consume as it relates to this sort of.
I mean, I have lots of thoughts
context?
considering I have a house full of consumers, but I think one of the challenges I have, and I don't know what happens here, is that I think that consumption, I think as a finance person, I think budgets are the greatest proxy for people's values, and that's what you should be tracking. I think what I worry about though is for some of these entrepreneurs, I just wish we'd stop making the Uber of, and like really focus on things people need, and so I really, where I will use the word, I really enjoy the realm of social entrepreneurs because I think they're figuring out how do I get things that people need, but actually solve a problem as well. And I think when we look at Snap, right? I mean, I love these companies go public and they ain't made no money. I just don't understand. And so, but I think that is a sign where the markets continue to go where people are using, irrespective of whether they make money. I think that's a huge opportunity for social entrepreneurs, right? Because the pressure is on traction and customer adoption and not how much money you make. And so I look forward to the day when impact investors can flip the markets and say, we want to follow that trajectory of consumer traction and really fuel the growth of those companies, irrespective of a short-term return, but know that we have both had significant savings because we've solved something down the road and we figured out how to make money off of it. It's one of the reasons why I actually, well, they're not bonds, but I get excited around things for pay for success, right? Because wealth can be created by increased savings and actually solving having to pay for something that is a gap filler as opposed to systemic change. So I have mixed reviews of having 4 girls who always want to shop around what is consumption, but I think that I wish we, as those in the social space, could flip it to say, look, I've got 1,000 people on my platform, and we are making microloans to folks, and why couldn't Kiva do what Snap did, right? Or whatever it used to be Snapchat, now it's Snap. Who knew they had hardware? I don't know why we can't do that. So I like to not always try to be anti the markets, but how do we mimic the markets where there's an opportunity for us, being marginalized, can still have predictors of the same growth trajectory. But I shouldn't say I just went shopping with my kids, so I'm just as victim. We went to Nike and every other place, so it's fine.
Yeah, I mean, I think people will, as they wake up, they're going to just starts going to snowballing, and then people will know about it. I mean, it's like, look at corporates and their energy sourcing and consumption, and universities are starting on this too. I was looking into Stanford. Is the move to alt energy by corporates? It's being driven tectonic by the pricing of it.
That's
just
right.
like coal lost 95% of its market cap in the U.S. stock market in like 5 years. And that wasn't because there's a bunch of do-gooders or a bunch of social investors. It's because coal is stupid business. It's dirty, yeah, that's true too.
Right.
But it's really
But
just
that's the
not very
opportunity.
cost effective.
But that's the real opportunity, right? Because
The people are
where
just like-
historically we've had policy levers, right, to incentivize people to do good, recognizing those may go away, that's a huge opportunity, right? That the markets themselves will just push out all that is bad.
Yeah, and maybe we could finish up with some policy stuff,
Yep.
since you broached that nice transition.
That's what happens when
Really
I
did.
didn't do it on purpose. It's just
I know
I
you
live in
didn't. That's
DC.
why I was like really appreciative of it, because it's so natural. It's just like, wham, right where we wanted to be. And I think we're pretty good on time too. I've done
Yes.
10 minutes. Yeah, policy. I mean, there's gosh, all these reporters are coming at us today because we held this briefing. Impact Assets had East Coast, West Coast financial advisor roundtables, and everybody was talking about, like, what do we do in this administration? What does it mean for impact investing? Yada yada yada, with Trump and da da da. And then, so the reporters all follow up afterwards, and they're like, so what are do you have all the data about how, like, what does this mean? And all these people are going to suddenly do impact investing. And we're like, no, we have no data. It's just like everybody's talking about it, but it's not. So what is? I mean, that's just one piece. It's like, what do you think about this administration in the next 4 to 8 years to forever?
I try to do 2 to 4.
2 to 4. Right. Well, I thought, I don't know if people keyed into this, but the betting sites, and I saw this in the Times reference. I'd heard it the week before that there's like 30%. There's 3 to 1 odds, 1 to 3 odds that.
Finish.
There'll be impeachment before January 1, 2018, 1 to 3, and then there's like 50-50 that won't make 4 years.
I'm on the 50-50, won't make 4, but
Yeah,
it's okay. It's okay. But so I will say, I mean, being in DC, so I was like, do you guys even talk about policy out here? Because
No,
sometimes it's boring.
we don't.
So I will say this. I mean, I had the privilege to serve under Clinton in the Treasury Department. I served in the White House with Obama. This is the beauty of being old, right? The day after the election, my students were all crying. I was like, y'all ain't seen bad presidents. You only voted for Obama, so you have no context. Because there have been some bad people
Really bad
before. I
ones,
mean,
yeah.
woo! But luckily I'm still standing. I will say this. I think that I do have the privilege. I co-chair the National Advisory Council for Innovation Entrepreneurship, which basically means we advise Wilbur Ross, the new Secretary of Commerce, on innovation entrepreneurship. So we've had our meetings. I will say that I am, as a person of color, I am optimistic because the base there is yet another marginalized group, which is rural America, and poor white people. And I think I have much more in common than a poor white person than I do a wealthy white person. And so from a markets perspective, I think that they are focusing on preserving tax credits and programs that actually, in their mind, how they define democratize access. They recognize that people in Appalachia have been shut out, just like people in Newark have been shut out, and we've got to do something. The challenge, so I think the policies will stay the same. So then it becomes incumbent upon us to reauthorize Community Reinvestment Act, so banks actually have to do their work. I think we have to uphold the value of what a community development financial institution is. I think new market tax credits are going to be fine. I think the challenge is the money that has been used. At Commerce, we're pretty sure the Minority Business Development Agency is going to go away because they need the grant money to do other stupid stuff like build a wall. And so I think it's going to be a test, right, for progressives who are all about policy, of how do you actually make it work, right, without the incentives? How do you get the markets to follow policy? So I am a Democrat, but I think this is an interesting turning point, right, because I think people have been subsidized to make decisions that appear to be good, but they have not ultimately believed in the markets. This will be a chance where people are going to believe in the markets or they're not. And so I do think that, at least from Commerce, which is the largest agency that we have, and we control weather to the census, there is a strong examination of how the census will be used, which I think is a good thing, and it's going to look beyond just race and think about the complexity of demographics and the new majority. That's extremely exciting. Who would have ever thought that would have been a conversation I'm sitting there having with Wilbur around how do we better use the census, because they're about minimizing government. So how do I use data to better drive dollars and make better decisions? Now, whether that happens or not, let's suspend belief for a second. But I at least appreciate the rhetoric in terms of really saying, let's get the markets to work and assume that the money will follow. And I think that's somewhat dangerous because some communities are always going to be historically underinvested in. But I do think this is a chance where we've got a lot of good policies, and if they can be preserved, let's see if it works.
Yeah, and I do think that there will be a positive correlation to increased impact investing and willingness to move to action, whether it be around, doing some kind of philanthropic endeavor or taking a rider on that, a flyer on that first-time fund manager. That maybe, and there's nothing like complacency and being incumbent to make you feel, to feel like you don't really need to push the envelope, which is, I think, where we maybe been for the last 8 years. As the progressives amongst us who tend to be at the forefront of this kind of stuff.
But as you alluded to, right? I mean, I think we've seen also impact investing have a indirect correlation that when the markets aren't as great as people expect, it's a great alternative asset class, right? And I think that the markets are starting to get a little rocky, and so it will be, I mean, as I talk to pension fund managers, it will be that alternative asset class where we've now divested. Now what do we do with it? So I also think that there's going to be a set of policy levers. There's also going to be a greater risk tolerance to say, what do we do with all that money that we took out of fuel and put it somewhere else? I think that we now have the capital and the will, and the markets, as long as we don't have any crazy spikes, you're actually going to get a better return. And so all the data will be in the favor of more traditional managers saying, let's do that impact thing because it's actually performing well. We've got the capital, we've got the time. Now's a better time than any.
Well, yeah, and the question is do people? I mean, it's back to the point earlier about there's two kinds of partners to work with. There's two kinds, and there's these folks who are kind of like slow followers and people who are really ready to dive into the deep end of the pool. And I think I do feel like there's some momentum going, and the macro is in our favor, is in the favor of all of this because of the generational shifts and the keys to the kingdom stuff. I think we could open up to some questions.
I'm counting on you guys. Come on.
And then we could always come back and circle back around and make some kind of concluding comments if we need to. But do people, I don't know, that was kind of like a walk around a lot of stuff and points of view.
Questions, comments? You just ready for the happy hour? Okay, yes.
Happy hour.
Didn't you on the scene? Since Oprah's running for president, there's a new job. There you go.
First, great conversation, a lot of content. I was scribbling the whole time. Also, Georgetown alum, so Hoya Saxa.
Oh, yes! Yeah. Woo! We're exciting.
So my question for you is, we talked a little bit about how impact investing is getting into some of the big banks, and whether you guys see that as a positive indicator of growth of the impact investing field, or if it's potentially concerning in that some of their impact investing practices will I guess expand the spectrum in some ways to be so non-concessionary that it's hardly impactful.
Yeah, I mean, the way I would answer that is it's those of us in the field, it's very frustrating when things are done kind of without passion and or quality, to the extent that there's some of that going on is at the broad marketization. Another part of it's why are we doing this? But to try to insinuate these values throughout society, and it's going to get really messy, and I don't think we have the license or the luxury to critique the adoption curve and its way. I think we should just like be happy that there's anything to critique at this point. I mean, that's one answer, but I do think that we should be. I think we should, worry about yourself. I always tell my kids, it's like, don't worry about your stupid friends and what they think and what they're telling you. It's like, are you doing everything you can to be a good you, or to be generous and to be kind and to be thoughtful and stuff like, and listen to your dad and stuff like that. But I mean, like as an impact investor, like, are you pushing the envelope? Are you where you're supposed to be as a vanguard leader, as a risk taker, and don't worry about the people who are slowly picking up on the fumes and making a bunch of money greenwashing themselves, which I think is probably maybe at some root of some of the question that you might have had.
Yeah, I mean, I'm happy people are doing it, right? I mean, I think it's a trickle down, right? I think that there is now enough noise around impact investing, even if people don't understand it, and there's enough success stories of people making money, even if they don't understand the true cost of capital, that if that then moves the needle at least farther than where it was. I mean, I will say, and I'll pick on them because I did, I think JP Morgan's desire to invest in predominantly, quote unquote, new majority communities at the level that they are is because that's not the outlier, right? There's a new outlier, right? That you want to talk about the environment and that's a good thing, but I think it's basically normalized the conversation, right? That the more farther extreme it gets, the more historically marginalized topics become more comfortable. So I'm like, let's have Peter Thiel keep talking about a new planet. Go for it, because then maybe everybody will be included. So I think, and for banks, to me, they should have been first, not last, right? Because they actually had the policy levers that should have incentivized to do that. So, I'm like, everybody's a work in progress, right? I have these debates, and again, don't throw anything at me, but people are like, Walmart is horrible. I'm like, have you ever been to Ward 7 or 8? It's the only grocery store that exists, so get off your high horse. Walmart's working for people in Southeast DC. So I think it's all relative, right? And I think as long as we are mindful that the idea is to ultimately get everybody to do good. I got 6 kids. I just want them all to sit down. I don't care why they're sitting there. I've had to let go of how they get there. The fact that they got there is what's most important.
Some have been stapled to their seat.
Hey,
other ones have been bribed with chocolate.
However you get there.
And the other ones are like, because it's the right thing to do,
Exactly.
Ma. Yeah.
Exactly. I don't care.
Awesome. I love your authentic sitting.
That's right.
For the right reason.
You're all going to get points. It's all good. Just sit down.
But the point is they're all sitting.
Exactly.
And quiet, because some of them have had their mouths
It
taped
happened.
shut.
Hey, duct
and other
tape.
ones are chewing on chocolate, and other ones know it's the
whatever it
right
takes.
thing to be
Yeah.
quiet and listen to you.
Right.
Tell them what's what.
Right.
Yeah.
What is that? Enemy. The perfection cannot be the enemy of good. No one is perfect, right? And I think, having spent some time out here in California and in New York, I think putting people on a pedestal because they made the right decision, no, that's just being human. Like, make the damn right decision. So I don't want to penalize people if they've gotten to the game late, which is what I worry about within the impact investing community, right? I think that we pick on each other.
Oh, well, I remember when
sometimes.
impact investing was coined in 2008, I think is when it actually technically was coined in Italy,
Of course.
On
course.
Lake Como, Bellagio, the estate of the Rockefeller
Rockefellers, yeah.
Foundation. Yeah, some weekend. I was not at that weekend.
I wasn't either. I'm still waiting for my invitation.
And they brought it back, and of course, like the whole social investment world that had been around for 20, 30 years was just like, not invented here, that's so stupid,
right.
Get out of here, I can't believe you, blah, 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 blah. And took like 4 or 5 years.
They're just speaking
It's
now.
actually really now. Then suddenly everybody's
It's true.
rebranding to impact.
That's right. But when Clara says all investing is impact investing, that helps too.
Yeah, Clara's good. Another question or thought?
I love it. You ask a
Thank
question
goodness.
every time I see you. I love it. I love it.
So another thing that I heard throughout your your conversation was this reinvestment in communities and people looking to the microcosm, the local, and really uplifting. You're seeing it in philanthropy. Large foundations are looking at American cities as places where we need to have impact and invest. And I'm curious, in your view, where and how are we amplifying these grassroots approaches to understanding communities and the issues they face, and how is Capital responding to that?
Have you heard of Activest?
No.
So it's happening. Activest is a new platform that was derived out of the review, pricing, and payment of municipal bonds based on Black Lives Matters and the killing of Michael Brown. It was funded by Kellogg. It was put together by Frontline Solutions, and there was a recognition that one of the reasons that Michael Brown was arrested, one of the reasons when I was a Soros Fellow, an entire town of black people in Tunica, Mississippi were arrested, was because you get a reward based in the Department of Justice when you arrest a certain amount of people. It's like you joking, I got a ticket today because it's the end of the month and the city needs the revenue. They were able to prove a direct correlation between the arrest and killing, unfortunately, of black and brown individuals tied to the desire for the city to generate revenue to cover their bond ratings. That's exactly what happened in the killing of Michael Brown. So that's pretty powerful. That platform, assuming it goes up, it happens, people use it, beginning to uncover the systemic racisms that exist in the capital markets that have not only kept us out, but actually caused us to be killed. That's pretty powerful. It's unfortunately somebody had to die for that, but I think that's a sign that people are beginning to connect the dots. I remember there's a group that I'm a part of because, my kids, I always say to my girls, no finance, right? 2 + 2 is always going to be 4. History's going to lie. Somebody going to say Lincoln freed the slaves, somebody going to say George Washington, somebody say there were no slaves. Numbers are not going to lie. I think there is a recognition amongst this new generation and a desire to understand and connect the dots. So I think there is a tremendous shift, the reimagination of what a pension fund means based on what happened in Detroit. That's going to be pretty powerful. They're moving a little slow, but the fact that they're bringing people from all over the world, but specifically from diaspora communities, to say what does it mean to have a pension fund that is actually community focused, I think we're getting there.
I think it's also this really great example from last year that Calvert did with MacArthur Foundation Chicago, which I thought was really interesting. It's like an ours to own thing where they basically had this big foundation come in and de-risk it, and then you had Calvert come in with the investor capital and provide this community-based thing, and then everybody locally could invest in it, and like at any amount, $20 to $200,000 to provide the capital. They did a bunch of media and kind of community building around it, and it was to get money to really cool small businesses, and so some of them more social venture-y than others, and some of them just creating good jobs for good people that we're going to have a hard time getting banking capital otherwise. But creating these initiatives that are place-based, multi-stakeholder, seems to be coming online, and there's a lot more energy around it, which I think is good, and it's sort of in the same vein.
And when I was walking to the street, I saw Lending Club has a fabulous set of offices. I laughed. I teach a peer-to-peer class. I mean, let's be clear, they're struggling. So I also think that these alternative markets that people have backed extensively, like Lending Club and Prosper, and they're failing, then people are going to realize that there is not always more money to be made in the aggregation of funds without understanding the underlying inputs of capital, and therefore I might as well go down, just like you did at the conference, what are the companies you're really in? I think there is a localization of people understanding what is the source of the capital to be derived and how much do I trust them, as opposed to how much do I trust the fund manager. Yeah, sure. Just a quiet group. I'm gonna go back east and be like, man,
It's
they were so
5:25.
quiet.
It's 5:40.
She's a Hoya. She knows, like, it's keg time. No, I'm just kidding.
Okay, well, if there are no more questions, please let's thank our panelists. Tim and Melissa, thank you so much for your time and insights this afternoon. We are extremely grateful.